What is going on, ladies and gentlemen? We are back with a new video, and I'm actually going to be going over my favorite liquidity pools in this video. Okay, I have probably 4 or 5 of them, and these are very, very important liquidity pools to understand. And they're like the main ones I use. I mean, there's probably over 20, 30 liquidity pools, but I think the ones that I use the most are just they hit the most. So, yeah, without further ado, let's get started. If you want to watch me live trade every single day, you can click the WAP link in the description. I am running a discount for the first 2 months. It's half off, and then it's half off lifetime and yearly as well. It says half off for the yearly for the next 2 payments, but obviously it's only one payment, so that will probably go to like January 2nd. And yeah, you can watch me live trade every day, and I upload all my old live streams on YouTube. They're obviously all unlisted, but you can watch those as well. The other thing is, make sure to use, let me actually move this down. Make sure to use my Apex 71% off, code Dodgy. You know the vibes, you know. Again, prop firms are really helpful. I have a video on my Discord about how they work in the announcement channel, so check that out. Yeah, so without further ado, let's get started. So my first favorite liquidity pool, okay, this is like my ultimate favorite, is equal highs and equal lows. Okay, these are like the main ones I actually look for. I'm always on the search for equal highs and equal lows. And there's actually two types of these equal highs and equal lows. There's the type that forms right next to each other. So let me see if I can find an example real quick. Like these right here. And I do not put as much weight on these, but they're still semi-important, okay? Usually if we form these, it just usually means the bias is still bullish, but I'm not just going to say the bias is bullish just because we have two next to each other. I think the ones that are really key for me are the ones that form really far apart. Okay, so there's a really nice example on the 30-second from Friday, but look at this. See how these form way far apart? We got this one and then this one. Like, these are the ones that, okay, I'm interested in. Same with, like, these right here. See how this is, like, almost equal lows right there? Okay, when they're far apart like this is probably my favorite set of equal highs and equal lows. Again, the more perfect, the better. You'll not always get perfect ones like this. This was a tick off, I think. And yeah, you can just see what happens is we go back up to this fair value, get projected, and we go back down. But again, these are going to be very, very strong targets. Let me see if I can find one more example. They're always going to be strong targets, and I don't care what people say. They're literally the best liquidity pool you can ever use in this marketplace. Look at so we actually have some down here as well. So like these are going to be an interest for me in the future. But like if we do get a higher time frame short setup, these are going to be such a good target. And just because we have equal highs and equal lows does not mean you can just short. You have to have a model. So again, when we save these, so I'm guessing we're going to save them for next week or the week after, but these are going to come at some point, and they're going to be really nice. Again, the more perfect, the better. These aren't perfect, but they're really far apart, which makes them so significant. The second favorite liquidity I have is data lows and data highs. Okay. And basically what this is, it's basically a, it's, how do I explain this? It's a red folder news event, usually at 8:30 or 8:30, 10 o'clock, or like FOMC or like when JPO's speaking. And it basically, what it is it forms a wick that is off the 8:30 news. Okay, so on my Forex Factory, we had red folder news on Friday, and basically what happened is we got a data high here, meaning we wick up. It's a really abnormal wick, and I consider this a data high, and this is a really good liquidity pool. Okay, if you watch my last video, I kind of talked about the one setup for life video. This is what I use. I use data highs, data lows. I mean, there was a data low here, but we took it out. Okay, so not something I'd be interested in. And I mean, some people do ask, like, would this count on the 5-minute as a data low? I mean, it is the 5-minute at 8:30. I technically would not count it. I only count the one because, again, it's just a void that has not been filled. And, I mean, this has probably been filled because it's 8:32 by that point. This was probably the void not filled. Okay, there's probably leftover orders not being filled up here. So, and again, that just happens because this news is really quick. And then usually the market wants to go back up to the higher low. So I think it's best with 8:30. You can use it with FOMC as well. It's definitely the worst with 10 o'clock news, but we don't really get them that much with 10 o'clock news. And yeah, so again, those are my second favorite liquidity pool in this market. Okay, my third and final favorite liquidity pool is Probably, probably like the highs and lows inside fair value gaps. Okay, these are my third favorite. Okay, these are so underrated. Like, I don't get how people don't realize how underrated these are. I'm just gonna show you a few examples. Okay, on the 30-second chart, when we swept this low, we swept it very, very quickly. And what happens is we form these. Remember, you know how like we go on the south side of the curve, we'll leave highs inside fair value gaps. Okay, this is an example. Okay, and I call them intermediate term highs. I mean, sometimes ICT calls them short term highs. I don't really think there's, I don't think it matters. It's just a high or low inside of a fair value gap. Okay, these are such great liquidity pools. And they're only good liquidity pools when we're in the opposite side of the curve. So if we're bouncing from some sort of higher time frame fair value gap or whatever, these highs inside these old fair value gaps are like my main target. Like this, for example, this was the silver bullet on the 30-second for the afternoon session. All right, and like I'll target here, and then the final one right here. And I know this is a 30-second chart, but this applies to every time frame. I'll show you some more examples. And yeah, this is just a great liquidity pool, and this is so underrated. I don't know why people don't use this more, but these highs and lows inside these old fair value gaps are great targets. I mean, if they're it's hard to say these are my third favorite because they're so good still, but I mean, equal highs and equal lows and data highs and data lows, I like the best. I think it's very hard to put a choice. An example on like the higher time frame here would be, let's see. So this would be an example on the higher time frame. Okay, we have an intermediate, or we have a low inside this fair value gap, and then when we reject up here and come back down, that's when I'm worried about it. You're probably wondering, Luke, would I be worried about this high here? No, unless we came down, swept liquidity, and then started back up on the buy side of the curve. That's when I'm interested in this high. Okay, it's not when we're rejecting it in the first time, because look, on the 30-second chart on Friday, like we rejected this and went all the way down. I'm not targeting this high until we get a long framework. Okay, I do not care about this high until we go on the other side of the curve. Okay, so I'm again on the 1 hour. Let me just show you some more examples. Let me see. I know there's one from over here. Again, you'll notice this a lot in the lower time frame. Like here would be an example. Okay, this was a high inside of fair value gap, and we kind of deliver from this order block. This is where the volume kind of drops off a little bit. There's one 4 hour example. So here's a really good example, right? We're bearish at this point. Look, we're bearish here, but then look, when we bounce out of this fair value gap right here, that's when, okay, now we're in the buy side of the curve. Now we can target the intermediate or the high inside the fair value gap, right? You're not targeting it here. You're targeting it when we reverse. And you can see, like, we'll react to a lot of them. So we kind of reacted to this really nicely. We got a short, and then obviously the market held this for our fair value gap and we went up. But you're going to see how good these are, and you're going to notice them a lot in lower time frames, in my opinion. But remember, just because they're formed in that second does not mean I want them. Like, look at this, for example. We form an intermediate or a high right here inside the fair value gap, and we don't come up and take it until we sweep liquidity again. See this? So again, it's a really good liquidity pool. It's so underrated. Yeah, that's my third and final favorite liquidity pool. Hope you guys enjoyed this video. Let me know if you guys have any questions. And other than that, I hope you guys all have a good Christmas. Comment Santa Claus if you got here. And I think that's it for now. Again, I'm going to be running my sale for my Discord where I live stream every single day until probably January 2nd. So that'll probably be the end of it. But that's it for now. Hope you guys have a Merry Christmas. And yeah, peace.